Hello, everyone can hear me? I am Uma here. Today I am going to talk about trend analysis with 7 steps. What is trend? Trend is our friend. Trend is our friend. Trend analysis is based on the idea that what has happened in the past gives traders an idea of what will happen in the future. There are three main types of trends: short trend, intermediate trend, and long-term trend. Long-term trend means largest trend lasting for more than a year. This is called long-term trend. Intermediate trend. The second is intermediate trend is lasting for 3 weeks to 3 months and is often associated with a movement against that long-term trend.
Uma, please show your screen.
Thomas, can you hear me?
Please show your screen. The screen.
Can see now? Thomas, can you hear me?
1 minute. Let me check.
Okay.
No, we cannot see. Can you show your screen? Please press the play button.
Play button. Now can see?
1 minute. No, still can't see. Okay, now I can see.
Okay. Hello. Hello. Good evening to all. My name is Uma. Today I am going to cover trend and trend analysis and follow the 7 steps. What is trend? Trend is your friend. Trend analysis is based on the idea that what has happened in the past gives traders an idea of what will happen in the future. There are three main types of trends. Number one, short trend. Number two, intermediate trend. The third one is long-term trend. What is long-term? Long-term trend is the largest trend lasting for more than a year. This is called the long-term. Intermediate trend. Intermediate trend means lasts 3 weeks to 3 months and is often associated with a movement against the long-term trend. The last one is a short-term. Short-term trend means last less than 3 weeks and is related with the movement in the intermediate trend. These three types of trends we can going to see now. The next, what is the long term? This is called the long term trend. This is usually used more than 1 year. This is intermediate trend. Intermediate trend means in between the long term trend we can see the other way the trend is the downtrend. That short term trend also follow the intermediate trend is also there. This one is called the shorter period only can use this trend. Next, trend line. This just now we saw that trend. This how to draw this trend line, how to draw the intermediate trend line. All these we can use that trend line. Trend line means trend lines shows a trending direction of the market movement. Trend line must have at minimum at least 2 more points connected to form a trend. The trend line also 3 types of trend line: upward direction, downward, and sideways also. The trend line can have. This uptrend. After there will be series of higher highs and higher lows. This is a series of higher highs. These 1, 2, 3, 4. These are the series of higher highs. Also the series of lower lows. 1, 2, 3. All these. These all called the higher lows. Once we connected all these points, we can see a trend line. Also this one also called the support. This one called resistance. Next, downtrend. How to look the downtrend? This one also a series of higher lows and series of lower lows. This one called lower lows because this one is a downtrend. You can see the downward direction. So we can see higher lows. These all this one the lower lows. Once we connected all these points, then the market direction is downwards. Also this one used as a support, this one also used as a resistance. Then the third one is sideways. Sideways trend is also called range. The price move horizontal in a way. The sideway also called range or consolidation. It is before the price continues in the direction of the previous move. Also you can see here the price always touches the horizontal line, then come back, then goes back, then come back. Also the support also in the horizontal line, the resistance also in a horizontal line. This one called consolidation or range. Okay? This one will happen after the long term period. This one is a downtrend. After happen this one, after this will going to happen, follow the previous trend. This one is a downtrend. So after this happen, this will going to break down. This is the meaning for the consolidation period. Next. Now I am going to analyze the 7 steps using the chain to find the 7 steps. What is 7 steps? The step number 1, start your day with drawing a support and resistance lines. This is just now we draw the trend line. Right? That using the trend line we can find the support and resistance. First we are using the macro wave. Macro wave always use in a weekly chart. After that, once we find the trend, then we can use the daily chart. Daily chart also can find the, this one can use the intermediate trend or the short term trend. All these can use the daily chart. Step number 2, establish MA 200. MA means moving average. Moving average 200 and moving average 120. We are using 2 moving average. Then once we apply this moving average, we know your trend, which direction the price move. This is the using the moving average you can find this. Step number 3, establish your Bollinger Band. Know whether the Bollinger Band oversold or overbought direction, which direction the price goes. Using the Bollinger Band can find. Step number 4, establish your RSI. RSI means relative strength index. Know the currency strength and whether it is corresponding to overbought and oversold of the Bollinger Band. Once you apply this one, then you can establish the ATR. ATR means average true range. This is a profit taking reference point. This is profit taking reference point. One ATR of with the trend. That one ATR, the ATR can show the how much the price moves, the movements of the price. If the price moves higher, then we can use the ATR to calculate how much you are put the TP and the stop loss. If we are following the trend, we can take one ATR. We are against the trend, we are trading against the trend, we want to put half ATR. Until now, if anybody any doubt, please can ask me anything and write down the chat box. Until now, got any doubt? Until the 5 steps, got any doubt? Do you want to hear me? Okay. Now I'm going to just explain the step number 6. Having a trading plan. Once you are find out the ATR, the price movements, then we can take a trade. Once we take a trade, we want to analyze the how much the risk you are going to take, how much you want to take the profit, how much you want to put the stop loss. This is once you are following the chain, then you put the risk reward 2:1 because 2 means you are taking the profit to 2 ATR, stop loss is 1 ATR. This means we are going to take a risk 1 ATR. The price goes against us, we are got loss of 1 ATR. That's the meaning 2:1. When you are against the trend, now we are going to take a trade against that trend means we are taking the risk reward as 1:1. Because if against the trend you are taking TP1, the, the price against us, we are cut loss our stop loss 1 ATR. That's the meaning risk reward 1:1. Step number 7. Once you are entered or once you are taken the trade means decided to take a trade means then you put the comments on the which trade you are going to take against the trend or with the trend. How much for API you are going to take a risk and reward. That's the points we are in the step number 7. Now I am going to find out step number 1. This is step number 1, macro view. Macro view means weekly chart. We are going to taking a weekly chart, then we join connecting the points, lower lows, lower highs. This one is the higher lows, higher highs. All these points, once we connected these 2 points, we can get the trend line. This one is the looks uptrend. Macro waves says this one is the uptrend. Also these 2 points also can use the support, the upper 2 points also for the resistance. After once you find out the trend from the macro wave, we are going to shift the chart to daily chart. Step number this one microwave, daily chart microwave. This one also we want to find out the support and resistance. Also draw the how many you can draw the support and resistance. How many trend lines you can possible can draw. This one now can you see the here? These all the uptrend. 1, 2, 3, 4. These connecting these 3 points, we can see a one trend line. This one called the support also. Once you draw the support line, then you drag the line and top can touches more than points. It touches the more than points. You can see the resistance points using the resistance points. Same thing, this one also resistance. Using these 3 points can draw. This one also called support. These 2 steps we want to do the first one is macro wave, the second one is micro wave on the daily chart. After this, once you finish this one, go to the next step. Step number 2. Step number 2, after these 2, you put the ME 200 and ME 120. ME 200 is orange color. This is the ME 200. You put the ME 200 orange color. ME 120. 120 is purple color. Now you can see the 2 ME moving average. The purple color is below the orange line. This means the trend is downtrend. Once the once the purple line cross over the orange, then the trend reversal ready. I mean the trend is uptrend. The purple is down means the trend is downtrend. The purple up means up the orange line means the trend is uptrend. After that, step number 3. establish your Bollinger Band. Now, after you put the moving average, now you know the trend or the trend. This one is a downtrend. Now you put the Bollinger Band. Also, you want to find where to enter, where to exit, or the overbought and oversold condition. You want to find overbought and oversold condition. Now you can see here, this one, the moving average is say downtrend. So we cannot enter immediately. Further, we want to take a further confirmation. So now you can see this one. Once the cross ready, then we can, after the candle closing below the moving average, then we can take a trade until here. This one is a downtrend, so we are taking a sell trade. From here, this one is the follow the trend. After this one, you take here means this one is against the trend. So this is the confirmation where is the overbought or oversold. Now here see, this is the oversold position. This is on top, can see this one is overbought position. That means the price already overbought already. Then we can find the entry point to sell. Here already you can see this one is a oversold position. Now you can find another further confirmation more using the technical analysis. All these can confirm this one the oversold. Then you can find the entry point. This is the use on the Bollinger Band. Next step number 4. Establish your RSI. Now you step number 3 and 2, we put in the moving average, find the trend, then Bollinger Band, oversold, overbought condition. We find the overbought and oversold condition. Now using the RSI. Until now, got any doubt? Anybody? You find the MA and overbought, oversold position. Hello. Until these two can clear for you, how to find the moving average and Bollinger Band. Okay, I think maybe you are clear already. Then I will go to step number 4. Okay, establish your RSI. Once you find the trend and the overbought, oversold condition, then further confirmation you want to find. So you put the RSI. RSI, you can see this is the overbought zone. This is the oversold zone. Overbought zone means once the RSI reaches here, then we try to get the sell position. Oversold means already the price oversold already, so we are waiting to buy. So this confirmation can give the idea to take a trade for this one. Next, step number 5. Once you find the overbought and oversold positions all, then you take a trade. How much you want to take a trade? How much risk you want to take? How much APR you want to find? How much the APR, the price moving? So once you put the APR here, you can see here 1 ATR. 1 ATR means 97. Here you can see the last price is 79 points. So 79, you want to take 79 points, 1 ATR. So once you see here, this one we are taking a sell trade. So we are taking a sell trade means you want to take 1 ATR. 1 ATR means you are taking, this one is overbought position. Overbought positions we are taking, we are enter here, we want to take 1 ATR. This one is oversold position. So oversold position means we are taking half ATR because we are against that trend. We are trading against the trend. So we want to take half ATR only. This kind of analyze can use the ATR. Now step number 7. Once you find the risk, reward and the trend, all this you find out already, then you put keep your journals. What type of trade you are going to take, how much APR you are going to take. Once you are decided ready means then we enter here one APR. You are taking against the trend or follow the trend. Then you enter the trade. Now I am going to explain all the 7 steps in the live method trade in my chat. Any currency also. Now I am going to draw the, and if I want to catch the trend line first, this one is my weekly chart. Step number 1, macro wave. Macro wave, I want to draw, catch the lower point to higher point. This one is my, this one is macro wave. Macro. You can see this is my low, this is my low, and this is my high. So I draw the line from here to here. I catch the as many as I want to. Now you can see this one. At least we want to catch at least 2 points. Here 1, 2, 3, 4 points. I catch 4 points. Then I drag the line from here to here and can see the resistance. This one. Here I catch 1, 2, 3, 4. All these are resistance. This one is the support. This is the trend line. This one is a macro wave. After finish this one, I go to daily chart. Until this can clear everybody. Now you know how to draw the trend line, or I want to explain again. Please write on the chat box. Okay. Now I am going to okay. Now I am going to daily chart. Daily chart. Daily chart can see the any other trend. I want to find the support and resistance all this. Now I can see that I get the current price to the previous high. This one. This one is the daily chart. You can catch the current price too. Okay. This one also called. This one is the daily charts. Draw the downtrend. 1, 2, 3, and 4, and 5 points. I get the 5 points here. 1, 2, 3, 4, and 5 points also I can catch it. So this after finish this one, I go there. Step number 2. Step number 2, establish MA 200 and MA 120. What's MA 200? We put the MA 200 first. Moving average 200 orange. Now you know the trend, so delete the trend first. Okay. Now I put the MA 200. Then I want to put the moving average 120. 120 is a purple color. Now this one can see the purple orange cross over the purple. The purple is below the orange. So this one is say trend is a downtrend. After this until now here the price crossover. Crossover here means the price changes the trend. Now the price squeezing, we cannot find the trend. Which direction is the trend? We cannot find. So from we consider from this one is a downtrend. So next step we can put Bollinger Band. First we want to put three types of Bollinger Band we want to draw. The first deviation 4. Deviation 4 is in blue color. We want to put the blue color. After that I want to put the Bollinger Band. Deviation 3. This one is red color. After this, I want to put the Bollinger Band 2. Deviation 2 Bollinger Band in green color. Once we put the Bollinger Band, now you can see clear. Already we know the moving average tells us that this one is a downtrend. Bollinger Band. Now we find the overbought and oversold condition. You see here, this is the overbought. The trend is downtrend, but the price below the purple line. So now you can see the Bollinger Band. The Bollinger Band already the price touches the green line. This one tells us this one is the price is overbought. Already the price of overbought. Then here you can see this one is below the below the Bollinger Band. This one tells us this one is a oversold. This one also oversold. This one oversold. You can on top can see the overbought condition. These all overbought condition. Now further confirmation we want to put the RSI. Okay, next step RSI. Step number 4. I put the RSI. Now you can see. Okay. This is the overbought area. This is the oversold zone. Now the middle of the 50 is the EQ line. Once the price reach here, this is the already see price is overbought area. If the price reach below, the price is oversold. Here you can see here the price breaks the EQ line, then the price goes up. Then you can find here the Bollinger Band. You can see here the RSI say this one is an overbought position. Bollinger Band also says this one is an overbought position. So if you want to confirmation to this one is a self position, overbought positions. The same thing can see here. This one is the oversold position because the RSI is below the oversold zone. That's the meaning we can confirmation for using the RSI. Then you want to put ATR. ATR means how the profit taking reference, how much ATR you want to take the profit. So we put the ATR. ATR can see here. ATR says this one is 62 points. If you are taking a trade, sell trade means you want to take 62 points, one ATR. If you are taking against a trade means the price comes down, then you are going to try to buy. This is against the trend because already we know The MA 200 and MA 120 says the trend is down. So we want to follow, concentrate the sell trade. Once we try to buy, you are taking a buy trade means against the trend. So we cannot take the more than half ATR, we cannot take the CP. So using this ATR to identify how much ATR we are going to take. After this, step number 7, trading plan. Reason is the risk reward. Risk reward is how much you are going to take. That's the meaning the overbought and oversold condition. If the overbought condition, this one is here, you take the trade, you take the 1 ATR or 2 ATR. But you want to put the stop loss 1 ATR. That's the meaning 2:1 ratio. If you are taking a trade, buy trade means you are against the trend. So you are taking a half ATR. Half ATR means half ATR. The stop loss is sorry, was 1 ATR. Sometimes you take 1:1 ratio. I mean, you take 1 ATR, TP, same 1 ATR stop loss. Now once you decided everything, the risk, reward, how much you are going to take, everything decided, then you want to enter. Once you take a trade here, then you can see the comment box here. This one you want to type here what kind of trade you are going to take, how much risk you want to going to take. 1 ATR or half ATR, you are going to follow the trend means 1 ATR. Against the trend means half ATR. Just you want to type here, then you press here, sell or buy, which one you are going to take. That's all. Until now, got any doubt? Anybody? Thomas, okay? And then the science just got any doubt for anybody? Want to explain? Okay. Thank you. Thank you, Thomas.